Every year, UNCTAD examines key development challenges facing African countries and the policy options open to them. We do so from the global perspective and in comparison with the experiences of other developing countries, and identifying policy lessons to be learned or avoided. The 2015 Africa report, entitled Unlocking the Potential of Africa's Services Trade for Growth and Development, examines the issue of services, in particular trade in services. In this short message, I wish to share with you at least 4 key conclusions and policy recommendations of the report. The first is the good news that since the early 2000s, the services sector in Africa was growing at a rate of 4.6% per annum. And during this period, the share of services in Africa's real domestic output increased to 49%, making it the most important sector in Africa. In fact, in 21 African countries, the share of services accounted for more than 50% of their output, with services-oriented economies such as Mauritius, Djibouti, Seychelles, Cape Verde, the Gambia, Madagascar, to name but a few, registering even higher proportion, in some cases as high as 80% of output. This development, in effect, means that services now account for nearly half of Africa's output. And it also means that the sector was an important driver of Africa's recent impressive growth. Indeed, the services sector was the main driver of growth in 30 out of 54 African countries during the period of 2009-2012. This suggests that services played an important role in cushioning the effect of global economic shocks in Africa. In terms of employment, the services sector accounts for 1/3 of total formal employment, which is not bad, although not high enough given the importance of the sector. However, the sector is dominated by informal firms, which also employ a large number of the African workforce. Among the policy issues addressed in the report is how informal services providers could be transformed into a formal sector. The second point is that despite the good news relative to other developing regions, Africa remains a marginal player in global services trade, with an export share of only 2.2% of the world's total exports of services, compared to, for example, 3.6% for Latin America and 24.3% for Asian countries. This is partly because the provision of services remains suboptimal and is delivered at a high cost. One possible explanation is the regulatory and policy-related shortcomings which impede African countries from fully capitalizing on their services sector potential. However, the UNCTAD report has identified 11 African countries that have developed services export capacity, most of them small economies that specialize in tourism services. Some examples beside tourism include the financial and banking services industries of countries such as Mauritius and Nigeria, the commercial and cargo air transport industry in Ethiopia, Kenya, and South Africa, the educational services industry of Uganda, the telecommunication services of Egypt, as well as the port services industries of Djibouti and Kenya. Illustrative is Ethiopian Airlines, the fastest growing, largest, and the most profitable airline in Africa, growing by an average rate of 20 to 25% per year since 2005. The company is a $2.3 billion African powerhouse with a reported net income of $228 million in 2013-14, making it the most profitable carrier in Africa. Unfortunately, such success stories are rare, but we are confident that more and more African countries will develop the service infrastructure necessary for transformative growth, which is the main objective of Africa's post-2015 development agenda. The third point relates to the need to put in place clear and consistent regulatory and compliance frameworks to achieve efficient services. Infrastructure services regulation is critical as a guarantor of access to basic services, affordability, and to meet investment requirements and quality control. The issue of quality is a major concern in Africa, where networks are often quite limited in range and poorly maintained, and where private providers may be reluctant to expand and upgrade. This affects the international competitiveness of African manufacturing firms. In general, African states rank low in regulatory independence across all sectors, and standard models of infrastructure regulation are not regularly employed in Africa. Most African regulatory bodies are at an early stage of development, and they have modest budgets and often lack qualified staff members. The report has suggested ways in which African countries could begin to strengthen their regulatory capacity. Finally, the report raises a concern regarding the disconnect that exists between the three levels of policymaking: the national, regional, and global levels. After examining the national development strategies of 38 African countries, the report concluded that although many of them mention services, they do not clearly articulate what role the sector is to play in the development vision of a given country. Similarly, at a regional level, trade negotiations in goods are taking precedence over negotiations in services. Services are being relegated for consideration at a later stage. Such an approach is ignoring the fact that services are an important facilitator of trade in goods. Africa cannot boost its intra-Africa trade unless the efficiency of services provision at national and regional levels is addressed as part of regional integration negotiations. Equally important is to ensure that the national and regional level commitments are reflected in the commitments made by African countries at multilateral level. But sadly, this does not seem to be the case. Thank you for your attention.